Live. Let's go. All right, checking original, old school, Thinkorswim, rational charts. It's like we're talking, I don't know how many points below. What's at the bottom? Let's see. Little Fed worry here. Well, not believing the Fed's going to taper off to 50 basis point. Reading into some of the news that's leading towards that. Jobless claims came out this morning. We'll talk about those in just a second as well. Big part of the thesis. You guys ready to go? Y'all ready to get started? Woo, baby. Good morning. What's up, Mark? Alex. Chad. Good morning. Okay, 2 minutes still open. Whew. That music playing here. Good morning, guys and girls. And tell you, interesting to see the market just turn down like this. Let me read some of the news on Bullard. Further to curb inflation. This is featured this a little bit this morning, though. This was not from last night. Fed narrative is very strong, as you can see. Chances are really high that they do not start pressing further beyond 75 basis points. So that's I'm very confident that we stay at least at 75. But I do believe that we don't go at 75 for a while, maybe until next year. And again, my belief is that we do go to 50 number, but we'll see. Well, nice little turn down. We are irrational. Remember, this is always going to be, this is the S&P, this is the NASDAQ. These are always going to be resistances, no matter what playbook we end up getting. We did pass through triple B. This is the kind of the trade only range. Anything above 25.42, you get that effect. So I'm going to be very careful watching this. Yeah, the Philly Fed came out horrible. It's not going to be, let's take a look at the jobless claims really quick, because it's going to be very, oh, market's open, let's get ready to go. You hear the music. Y'all hear music? Okay, let's get ready to go. Is this a dip to buy? Do we go back to mean? Let's see what we get. So I'm going to look at this. I'm going to have it take NASDAQ resilience off just to give me some more space on the chart here. We'll take a look at what we got. Let's get ready for SPY. Rocket Scooter. Let's just actually go full screen here. If that's too loud, let me know. I know, right? Let's get some music on there. Okay. Good morning, guys. Click that like button. Let's get ready to go. Let's see if I get some off the screen. Right. Let's see what we're getting this morning. Is music audible now? So let's look right out the door, and I'm going to show you guys the irrational signal video really quick. If you guys want a quick recap, it's like a little 5-minute video. This is a really good training exercise for everybody. We'll show you on our channel here. We have these really awesome flags for how to find irrational markets. If you guys want a quick recap, this is it. Morning. What's up, Blue Edge? All right, let's see what we got. Ooh, here we go. Good spy, front and center on rocket scooter. All right, let's take a look. All right, we are opening below monthly hedge pressure. Really big deal, guys. Take a look at this. Not really sure. What's up, Tommy Smalls? Missing monthly hedge pressure again. That's really interesting. Up 395. Just came in. Okay, there it is. 395. A little bit of a delay there. Chilling, dude. Chilling to myself. Okay. Looks like we are in a very interesting playbook setup. Everybody, make sure you click that like button. You guys can really quick. I'm now determined to build my computer today. I know I keep saying I'm going to do it. I have a new PC build I'm going to do, and I know I'm just like eating up my CPU here. So what I'm going to do, my browser keeps freezing because I can't reopen this. I'm eating up my CPU. So I'm finally determined today. Today's the day, guys. I'm build my computer. Let's reopen Rock Scooter real quick. Is it Waterco build? Oh yeah. It's gonna be nice. Your browser freezes also. Yeah, earlier in the year we're gonna do like an optimization project. What is going on? Where's my candles? GPU's cool too. Yep, I've got inside the case. It's gonna be 2 motherboards, 2 CPUs. One of them's just a rendering machine. One of them's just the trading machine. And then both CPUs, they're like this. One's on the side, one's at the top. Will be water cooled. I've got 2 3080 Ti's, also gonna be water cooled. Custom water cooled system. I'm gonna be bending all the tubes today. Can't wait. Why are my candles all of a sudden not showing up? This is just me. Is this anybody else or is this just me? What's going on here? Like my thing is totally frozen. It's my computer though. It's so weird. Like nothing is showing. Let me log all the way out. All the way out. All right, let's do this. Oh, you know what it is? I know what it is. They loaded a new. Hold on one second. Don't go anywhere. I know what he did. Give me 2 seconds, guys. Coming right back. Load up all my stuff. You just can't see my password. I'm gonna type it back in. My password. My secret. I love My Little Pony. You can't tell anybody. Don't tell anybody. Just kidding. All right, we're back. Hold on. Where's that? Found it. Where's my encoder? Let's go. Back. Woo. Okay. All right. Yeah, I actually forget. I usually have like multiple versions of it open because they'll bring up a like make a new version, and I need to refresh. And I didn't refresh. I actually was sitting there in an older version. They pushed another version of it live. I should log out, log back in. Yep, you seen the password? Don't tell people that password. Okay, so we're back on the liquidity map. For some reason, that's what I keep saying. It keeps on stalling. We had that yesterday too. Anyways, let's kind of go with it. Let's put this front and center. They're working on this issue. So I think what's happening, to be honest, is our data providers. Remember, we bottlenecked their shit. I bet you their shit's getting bottlenecked again because of the new CBOE data. And everyone's bottlenecking them because our pull machines keep getting stalled out. But it's probably them because we had an unexplained phenomenon yesterday as well. Okay, so let's take a look. We are definitely in the bear side and short side of things. I don't really know where monthly hedge for sure is. Are y'all getting the numbers? Oh, yes. Yeah, whole lot of new data for them. Let me check really quick. All right, let's get ready to go. Good morning, guys. Make sure I hit that like button. We're going to get started in just a second. Market's opening irrational, so there's really nothing to do. If you want to just kind of a quick, quick and dirty. We're not seeing... I would say this. I think I know what's going on. And we're going to have to take a look at this. We need to make sure that because a lot of times these, it's funny because CBOE has a new SPY and QQQ options. So they may not call them the same designation in the name. You know, sometimes like VIX will be VIX and then VIXW. I have to look at this. They're probably going to be called ooh, okay. All right, we're back. Turn the scanner. Let's see if we get any bull side breakouts of the data we do have, which is interesting. Yeah, I'm gonna see what's going on with our data team today. I have to look at it again. No, it just means it doesn't have it. It's not coming through. What we're theorizing is that the new, remember back, you know, earlier in the week that CBOE released new options for Tuesday and Thursday. So it being a Thursday, it seems to be that you know, SPY and Qs are going to have our team that runs our black box is informing us that they're having a hard time getting the new data from our data providers. So it's likely they're bottlenecked from the new throughput. They were operating like right on the cusp for the longest time when it comes to that. Yeah. Good morning. Let's talk about the It depends on where monthly is. So right now the market's irrational, so nothing anyways right now. So we're gonna see what's happening. Let me see if we're getting anything. What happened? Look, like our data machine stalled out, and so what happens? We think is our data providers can't handle that any throughput, and so they're probably, like I said, I'm sending them an email right now. See what they can comment on. Where am I from? Texas. Let me show you guys what the irrational market stuff looks like first. Let's go here. Anytime you're outside of these doomsday bands right here, market's irrational. Let's go ahead and talk about these yellow lines because they're going to be very important. Yeah, things should be our, let me look at this really quick. Okay. So if you guys remember, I know this is a little jumbled up, but actually these are the old dynamics. We had a little demonstration on these one day. You're right here. Yellow line was right here. So this is also resistance for today. Keep an eyeball out for this level to pivot. 39.34 is going to be a big pivoting level today on the S&P. Any downside that we have right now, let's go ahead and mark any anchor points to the downside. You just get these pivots, just put right here, and you make sure you track them, you guys, with the numbers. Everybody, if you want to mark your red lines on the chart, if you're cheating in today, a little gift for you. Just take my red lines, mark them on your chart. And these are going to be it. This will be something for today's session. This is in the overnight, so I'll go ahead and do this. Give you those numbers very quick. I'll type them in chat. This is just finding retracement anchor point levels. This is 39.85 and 39.51.50, 39.85, 39.51.50. We've been setting our methods. That's going to be very important for you to have that number in front of you on any return trip, and of course we always mark any downside yellows from those anchor points. We'll get to that later. This is old. I'm just going to delete this. This is a demonstration area. I know this is a little messy here. This is just what we use for keeping track of all this stuff. This is not the chart I actually trade with. It looks a little cluttered, but we do make sure to just mark all of our relevant areas here. Okay, let's take a look at the jobs report, because this is what's really important, at least going into the bull thesis, right? We need to look at the continuing jobless claims and the first-time jobless claims. So get the liquidity map front and center. Scoot over here to the economic calendar. Just refresh that. So the MHP line, red knight won't draw. It'll draw that sloped line when it has not got a value. So that's how we know that the data locked up. It got halfway through the pull and then it just froze. So they're looking into it right now. Somebody said, since there's a lull due to irrationality, do you have a cheat sheet or Excel that we can use to learn to calculate the position management variables? Well, let's talk about it. Yeah, we can make something if you guys want. That was a great session yesterday. Did y'all have fun? You guys mind tapping that like button real quick? Give the stream some like. There's a commentary here in chat if you want. Since today ES has already blew past the RI, does that mean no trade entry? Yeah, so right now I'm looking for a bull signal even on the south side of the rational walls. So I'm going to wait until I get my clear signal, but let the market stabilize a little bit, and we are going to fight at that triple B. So top of my head, playbook BSD. You don't, the up or down, you could still use the hedge pressures as pivots if you have some of the calcs. So it feels like NQ leads ES today. We'll have to look and see. I will double check, but still in general, what you want to see with the stock market selling off is that you want to see the S&P come down, and it's always going to be, you know, essentially a more representation of the entire sentiment of the market. NASDAQ is just going to be a couple of sectors. It's like telecom, healthcare, and tech, right? So if people get out of NASDAQ and NASDAQ's tanking, but they're getting into banking, the S&P will hold steady. So just because NASDAQ's falling down and people are moving money from one sector to the next, then, you know, S&P is not going to tank if it's still getting that market cap infused from like selling one sector and going to another. So today we're going to look at these numbers. Our building permits, it's a little bit of a beat. Continuous jobless claims and initial jobless claims, very important. Bad news is good news on the jobless claims front. And again, as we so accurately forecast before when we did our thesis, was that as jobless claims, initial jobless claims go up, companies are letting people go. If JOLTS are coming down, they're closing the jobs out. JOLTS coming down, jobless claims coming up. We forecasted inflation would peak and pivot from our thesis, and we were correct. And then now inflation turns around, and everybody's like, okay, inflation's coming down, the Fed's going to act. But see, we're in at the bottom, way in the beginning of October. I'm sitting there buying at the bottom. So I'm not abandoning my bull thesis yet. As long as this is not showing signs of permanent decline. See, we do have a nice little build here, and then a little tick down, but it did beat expectations. It's a slight beat, and this is, again, it's just noise. I want to see as the weeks go by every Thursday that this comes in and starts to show more people losing their jobs. And we know a lot of big companies have been announcing layoffs. That's a great sign. Again, a great sign for the market. Companies letting people go or by closing the jobs out is going to be more people unemployed and the labor pool growing. Labor pool growing means less competitive wages. Less competitive wages means people are going to be desperate to pay for these expensive homes that they paid for during COVID. And so what they're going to have to do is get any job they can just to pay the bills, which means they lose their competitive edge to go out there and desire higher wages due to inflation. They're going to take whatever they can so at least they get a job, because more people looking for jobs. With fewer jobs available, wages plummet. And the mechanics of this type of inflation, cost push inflation, is cost of labor, cost of raw materials. Cost of labor comes down, inflation comes down. That's the correlation we made. Inflation's been ticking down as those jolts have been coming down. And people are getting laid off. So companies are eliminating their 10% of their work from homes, Netflix from home, surf Reddit from home, and still get a full-time paycheck and benefits, folks. And you're starting to see people getting long on these earnings reports because they're betting on that next move on that stock, being that the company is going to improve their bottom line and be more efficient, this and that, have more free cash flow, more profits. More profits always correlate with higher stock prices, as well as the labor market showing signs of people getting laid off, is a hint that the FOMC may not raise rates as aggressively. Because if they drive the labor market to the ground, they press us into stagflation, and it's an irrecoverable recession at that point. Inflation with high unemployment is called stagflation. Imagine, you have your job and everything's nice and dandy. But a loaf of bread costs $20, right? And you're like, damn, that sucks. It's eating into my paycheck. Well, imagine if it still costs $20 and you didn't have a job. Imagine how many fist fights you'd have to get in a day to make a sandwich. Ugh. Right? So you're not going to really see that kind of, the desire for the Fed to drive us into the ground that way by nuking the labor market, by aggressively raising rates while people are losing their jobs. Just because Wall Street's not going to really affect the economy so much, but Wall Street's perception of that is bad, and Wall Street will start selling their stock, right? Which will start causing additional panic, which will start inducing more layoffs, right, to save the stock price. So as little as we like to say the FOMC cares about the stock market, in this case, I think they do. That's part of the thesis. Welcome to the stream, everybody. You might tapping that like button. We'll drop some more knowledge bombs for y'all. Waiting to see the market flips rational again. second. Okay. So right now, downside in this irrational area, we don't really do much. So I'm going to wait for the market to show signs of stability before I even decide to take anything. This is going to be a 39.46 on the S&P. As soon as it tucks back in, that's going 11.666 on Qs. Keep an eye out for this 25.42 if you guys want to know a really nice level for VIX to look at. We look at VIX futures as well. 25.42. If we are below here, then that VIX contango is overpriced in, and then we'll be pretty much golden for the rest of the month. The month starts on the third Wednesday of the month on VIX, into the following third Wednesday of the month. So this is a through December sort of thing. Usually the market will play at this level a lot with abnormally high volume. This is one of our calculations and the tricks of the VIX video. If you guys are part of the membership, you can watch that and learn what this is and what this exploits. This is very, 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 very important number to understand the perception of volatility going into the future. I think what mostly was going on overnight, I didn't identify a particular catalyst, but most of the chatter was that the speakers in the FOMC in the committee are starting to say we may not, I think is what I'm reading, is that the expectation for a 50 basis point is being disintegrated. Nothing that I'm finding overnight when I was reading the news today. So we're just getting Fed speakers sort of like, and that wouldn't have been overnight at 2 in the morning. So that's what I'm trying to say is in the overnight, I can't really see much other than a pivot down. Obviously, since the sell-off started happening around 2 a.m., this is on European schedule, so it's likely that European futures started trading down, like the DAX or something. Just talking to my data team right now. Taking a look at what's going on. Yeah, so when markets are rational, we don't really do much, right? We just kind of sit and wait for things to look a little bit better. Oh, good. Like it looks like our data is coming through now. I really do think that's what's going on. Our data providers are getting choked up with all the new QQQ and SPY options. Let me see what's going on. All right, let's go. DD's 0.5, which is good. I mean, we're also outside the bands as well. Okay. All right, let's see what we got here. Good morning, guys. So we do have those new Tuesday and those new Thursday options, which is a new kind of a new development. Let me close the platform. Let me reopen it. So what we're looking at is our data providers are actually like our data machines just like sitting there waiting for data to come through from our providers. So interesting to see. Are you guys getting anything? It looks like we have all the data coming through now, but my platform's still not showing anything. Is it just me again? You guys are good? What is going on my side then? There we go. That's what it is. All right, let's go. It's on. So what we do in the morning, right, with Rocket Scooter is we're going to do positional risk analysis on all the major indices, the products, and here we go. Now the data is just chilling right here. Resilience is positive, which is a good sign. We are bouncing off monthly hedge pressure, which is a good sign. This is the tiebreaker here. This being positive is showing a potential move up to fill the gap to the upside. This is a really good play, actually. Even though we're irrational, like I said, I always like to try to find an excuse to be a bull. The half gap between the two areas, right? This is another thing. So we have gapped from here, here. Remember, if you guys from yesterday's session, we're in the redistribution zone. So in the redistribution zone, resilience being positive does hint that the market does want to attempt to try to approach to fill the gap. This is actually not that bad of a sign for 390 long right out the door on SPY. This is great with the 1 point stop. The R&R on that is incredibly huge. Well, so what happened is in the last, just give you guys a little detail. If y'all read the press release, you know, SPY, if you trade options, index options, SPY had Monday, Wednesday, Friday expirations, right, for just over a month of them. And instead, the CBOE changed the schedule. Now there's Monday, Wednesday, but also Tuesday and Thursday weeklies that came out, and they're doing all of them for 2 expirations. So essentially, at any given time, the data throughput now has 5 different options expirations a week instead of 3. So our data providers were always really like, you know, they push ahead to like increase their infrastructure a little bit. And then every time, you know, new data comes through or something, usually there's a bottleneck. So like I'm talking to them and saying, hey, by the way, there's a bottleneck, right? So it's just probably data throughput. They probably need to upgrade something on their end. But at least on our side, we have to deal. Yeah. Can we get data for the market opens? Well, you can. We get data from Opera at the same time everybody gets data. Nobody gets data faster than we do. Everybody the institutional side gets it at the same time. So there's data that we need from the morning as part of the hedge pressure calculation. So we have to wait till the market opens to get another set of data for the whole correlation. Yeah. Probably something like browser. Yeah. Another thing is I'm gonna so I already have like a really nice computer, but I have this new stack of goodies. If you go to my Instagram, let me guys show you what my new PC build is gonna be like. Y'all want to see what a trading computer looks like? Let me show you. Not gonna lie, my new trading computer is going to be hella awesome. I'll show you guys the picture. So this is what I'm gonna be building. Little picture right on the screen. And I'm actually gonna do a video of a build like this. Very few people in the world have like tried to make a dual PC for trading. It's not something I normally do. It's a streaming computer, but they're all on one machine. So my new main is gonna be these stats right here. All this stuff was essentially my new computer is going to have for streaming. So essentially I'm gonna have like my normal trading PC, and I'm gonna have a second PC inside of the same box. So I have a special kit that allows me to put 2 motherboards in the same tower, and then I've got a special power supply that actually has 2 ATX 24 pins for 2 motherboards at once. So it's all top of the line stuff. So I got a 12900 KS DDR5 memory, yada, and a bunch of neat stuff. It's gonna be water cooled LEDs, custom water cooling, reservoir and pump. I've got GPU water cooling. Both CPUs will be water cooled as well. So I'm gonna be building that most of the day today after I get off the stream. I've been trying to do it. So I'm gonna have basically like one of the computers is gonna be doing all my normal trading stuff and everything. Another computer is gonna be doing the rendering of the stream and also drawing on the screen. So essentially splitting my CPU, since I have so many things being run right now while I stream, my CPU is overloaded. Even though I have like a really nice CPU, it just, there's only so much it can do. It's not multi-threaded, so it's a gaming CPU. I mean, it's multi-threaded, but like it's not designed for multi-threading tasks. It's more like a gaming CPU. I have a 10900 KS, which is a great CPU, and it's overclocked to like 5 gigahertz already, and works really well. But even so, like a lot of these processes just like lock it up. So the res is delayed, choppy, market's irrational. That's 100% correct. Now res is at this point not really delayed and choppy. It's just on the positive side and looking okay. So It's maybe a little not directional. Like it's, you see how when I say, I guess, let me start over. It's not like positive and strong or negative and strong. It is just sort of hugging zero a little bit. And that is what you expect in rational markets, right? Irrational markets. So today, not a lot. Be working on that today probably. So rational market, we just kind of sit back and kind of let things just chill until we get a good signal. I think that being above monthly hedge pressure is great. I'm deciding today how I want to handle my swings. I'm thinking about doubling down and adding to them right here. If we do tap monthly hedge pressure again on a second dip, BRSU on the playbook looks just like this. Let me pull this up right here. This BRSU, you can see that from hedge pressure to monthly, there is a scalpable range inside of here. With resilience being somewhat positive and strong, I do like the idea of this being support. So keeping that in mind for today. Let's see if I can write anything on the scanner. Let's look for some liquidity map plays. And I'm going to say right here, we're going to look for anything as the S&P and Qs are above monthly hedge. Let's look for things that are below that could possibly break up. So we're going to sort by all the Ds that are right on the edge of hedge pressure. This is a nice little trick to look for things that may have dipped below. And I'm trying to find things that'll keep up with the index. This is a nice little trick, right? So if the index is above monthly hedge and monthly res is above zero, then I'm gonna look for stocks that are right below monthly hedge and bumping right up against it. It's a great little trick. So I'm picking all the ones that are D, number one, and we're below. Let's find that are right below monthly hedge pressure. Actually, first, let's find the ones that have just broken up. And that's it. Okay, so we're going to do that, and then we're going to sort by distance from hedge, absolute value. And then hedge distance from yellow to blue is going to show some of the bigger runs here. So these are some nice little stocks. Lily has a 2.5% distance between the two hedge pressures and just broke up, and it's right on the edge. So this is what we're looking for, right? Actually, let's do... sorry, we picked the downs. My bad. So the ones that are down, don't worry about hedge distance. The ones that are on the downside, you're going to be in this correlation here. So BLD on the breakup. So we're looking for squeeze plays, right? BLD on the breakup is a nice little run to usually fill gaps or half gaps, especially if the res greater than zero. These are going to be great stocks to look for runners. So let's do distance to half gap since we're going to do a resilience play as well. Let's do below half gap. Find ones that are really behind. Ooh, Google, that's one of my plays. And we're going to go distance to half gap to find a very large runner potential, which would be Google. So Google is breaking through monthly hedge pressure right now, really far from its half gap and ready to run, ready to party. You'll see how I did this. So I'm looking for stocks that have broken up through monthly hedge pressure, which is a monthly gamma squeeze. Because resilience is greater than zero, I'm looking for stocks that aren't. So stocks that are behind the curve that will likely want to catch up. And then I'm looking for stocks that have pushed above monthly hedge because monthly res is greater than zero. So I can be clever, right? I can find some breakout plays. Google, BC, I'm not sure what NTAP is. AZN, and XLK. Let me change the status here. Edge pressures are like that. So looking for something that has a lot of run to go. So now let's say that maybe not something that is below monthly hedge, below half gap. Let's find some that are, let's just remove that altogether. And then we'll find some that have a long distance to hedge that have that same setup, BABA. Something that is just now breaking through hedge, just a nice little breakout. Oh, that is actually above. So that's good. So something that is now running really fast. BABA's a nice run out play today. So if you take a look at that. My focus for the computer is going to be, so instead of having like one, because I do a little bit of gaming on the side, not a lot anymore, but I used to. So instead of having, you know, a processor that's mostly designed for multi-core, multi-threaded processes, you know, I always get like really strong gaming CPUs. So instead, that's why two PCs are basically the same thing, you know, having one gaming rig for trading, because most of the stuff that you do, especially in Rocket Scooter, most of the trading platforms are not multi-threaded processes, and they're very CPU heavy, not much GPU heavy. So the GPU is just running the multiple monitors and things, and of course any gaming I would do. But the other CPU is like having, you know, two CPUs with multi-threaded, multi-core capabilities that are designed for like complex CPU processes. So instead of having like a very expensive processor that does it all, it's two gaming processors and have each one of them do separate dedicated functions, which is a way to have an uninterrupted stream. So most people build streaming PCs in the same way. The difference of what I'm doing that very few people do is put it all in one box. It can get really hot. You got two CPUs doing stuff, one crunching video the whole time. You know, you're going to generate a lot of heat in that box. So to have them both in the same box and water cooled in the same system is going to be quite of a challenge. And a lot of people, it's just now become like the trend in the last couple of years for streamers to have, you know, two PCs, and maybe the last 5 years it's been a thing. But to have them in the same box, it's kind of like companies are now starting to create all the stuff for it. You know, used to you could do it, but you'd have to like mod your box and put two power supplies in it. So now Vantex has a power supply that lets you do it. And so not a lot of people have really started taking that route because it's a very custom application. It's for a streamer who wants, you know, one computer to do all their computer crunching and then one to process live video and send it out. So you have to be a streamer, number one, probably to do something like that. And then of course, you know, you have to buy a lot of expensive stuff to be able to do it. And most people just have two computers. So the reason to put them in the same box is to save real estate on the floor. Since I've got a whole broadcasting setup in here, I don't want two computers like on the side, both sides of me. So yeah. So since the VIX didn't move much, will you say the overall market is well hedged? Yeah, absolutely. It means that people have overpriced their expectation of volatility going into this month because contango builds into the future. So whenever you're looking at volatility, and volatility is an immediate decay after the VIX rollover on the third Wednesday of the month, it shows people overpriced volatility. And so why would you overprice December's volatility? Is because you're expecting 75 basis points and you get 25. I have somewhat odd question during algo trading. What, if anything, causes prices to consolidate at seemingly random levels on an obvious directional momentum shift? Not sure if I understand the question. Let me read again. During algo trading, what, if anything, causes prices to consolidate at seemingly random levels On an obvious directional momentum. You mean like off of an event or a catalyst or something that happens? Baba's a great looking play today, by the way. Put the walls up here. Maybe ask that question a little bit differently. Guys, make sure you hit that like button while you're here if you like the knowledge bobs and content. We love you guys. VIX, okay, let's take a look at UVXY today. Baba's looking pretty nice and sweet on that play, by the way. So UVXY is hitting an actionable pivot at 9. So that's right. Thank you for letting me know, Sam. You're awesome. Everybody pay attention. This is getting right close to a second irrational sign on VIX. Anytime you interact with the bottom base of a bull zone on VIX, which is going to be 9, you're going to see that there will be interaction on the market. So there can be a very strong downside. We need to watch what happens at this volume spike here. As I just said it pops up like magic. Magic. Boom. And let's see what happens here. If VIX goes in decay, all signs are great for a run-up. Does everybody understand what I am saying today, right? This is a great setup. I've done nothing additional to my positions. I've added nothing to them. Things are great. My Google calls are striking at 100 for December 9th. Got plenty of time for that to happen. Way up on all my trades, which is really looking good. So keep an eye out, right? This is a second irrational flag that VIX is now turning on while we're outside of the doomsday band. These together, market get unusually volatile here. So be very careful on the next couple of minutes as this is an interacting point for volatility. So if this decides to rally through here, if we have a bounce at 9 on UVXY, the market will start to become unstable where we are and likely sell off. So be very careful. This is the go for today. Teaching you guys how to do positional risk analysis with Rocket Scooter. BSU has this particular layout, and we're looking at see how there is a very strong potential for there to be support at this yellow and a move to blue. So if this moves this way, the downside market can become even more downside for the day. So, you know, hold on to your britches here. Don't lose sight of 9 on UVXY. That is today's setup, right? Appreciate you guys. Stream is growing bigger and bigger and bigger every single day. We love you all to death. Go ahead and give us some love if you like it. Click that like button, leave a comment below. You know how it goes. Dude, it's so funny. You get all these like rando Twitter warriors that come out here and start yapping on your Twitter feed. Yeah, things are looking really really straightforward. Looking good. This is a nice, this is definitely a nice setup. But keeping an eyeball on that 9, right, on UVXY. So things are good. Things are really good right now. Strange, like bears love to throw a party like anytime, like, okay, so like really bad traders, I mean like really bad traders, I know this for a fact. It's funny, and I always tell this, right? There's no glory in being right in trading, right? It's like there's not a yearly Michael Burry parade for calling the mortgage crisis, right? Everyone hates you when you're early and you have an idea that nobody knows. Everyone makes fun of you when you say something like this is going to happen, like you're wrong. And the herd likes to bet the wrong way, and essentially you sweep the floor with, and you take all their money because you win the trade. And they don't come in after the fact and go, man, you're right, great job. They come in like, whatever, whatever. And they're all salty, right? Nobody, when you're the person that does something or sees something or makes up a theory or whatever that nobody else sees and you win, you don't really get pats on the back from people, right? It's just the whole point of trading. So one of the interesting things, what's a good target for Bob to talk about, is it's just, I posted, like, you know, back in October, right? The market's bottoming for the year. We're going to rally for the year. And this is when the market was in the middle of selling off, right? And I'm just like, this is it. Market's going to pivot and turn around. And, you know, I'm right ultimately. And there's no like, oh my God, so a party. This guy nailed it. He's cool. Let's pull him on our TV show. Nobody listens. Most people are like, you know, they'll chime up, you're wrong. And then when you're right, they just kind of like disappear because they don't want to be seen, right? They don't want to face the fact and go like, hey, great job, you know. We were wrong, you were right. Nobody does that. So I like getting the tweets and people just come in and post in my thread like, you're wrong. You're going to lose tons and tons of money. I'm like, it's weird when I'm up like thousands of percent on some of my trades, and then I'm only up like 900% today, right? It's like if you are, it's kind of like this, right? It's like the AMC folks, no offense if you're an AMC trader or the GameStop trader, right? You know, you're long, you're losing money, you're losing money for a month. All of a sudden you get that big spike and you're like, yeah, celebrate. We're totally right. But you know, the idea is that this is what it is. Like the one down day, the bears want to come back and say, see, we're right. But then like for the month, nobody says anything when you're right. So people are so stuck on being right that they don't listen to reason. And so that's a lesson for you guys as traders, right? That pinned tweet on my thing that just showcases a very logical thesis that I played, made money on. Every day the market shows up red, the bears resurface and like, oh, we were right. See, check it out. Market's up 500 points. They're quiet. Market's down 50 points. Bear market resumes. You're wrong. You're going to lose all this money. I'm like, I'm just digging into my gains a little bit. So the whole point is that I just like smile and nod, and I'm not in this for the glory of being right. I don't win all my trades. I won this one. That's how the game is played, right? So Baba, let's do an upper target on Baba. Let's go ahead and see where some gap fills are. But it's just funny that people don't go, oh, cool. What did you do differently? Let me learn something from you, right? What did you do to build your thesis? And you're just like, whatever, we're never wrong. We're always right. And it's like, Wall Street's a goofy place full of people's really weak emotions. And that's what trading is. And that's the whole point of coaching, is to help you guys work through that as well. So the first thing you look for is gap fills on Baba. Anytime you have breakout runs like this, especially monthly hedge pressure breaks, it can cause a really nasty gamma squeeze. So what you're looking for are gaps to get filled. So clearly 84.17 is one of them. You have 85.83 as another one of them. I'm just kind of showing them one at a time. You just smile and nod. There's no... Here, 94.72. So you look for gap fills to be upper targets on some of these plays. How do you calculate triple B, Sam? Yeah, there's a Tricks of the VIX video, I think, goes over it. There's a couple of videos that cover it. I think it's actually called that as well, directly. Yeah. I try to be like funny, but I'm like, should I? Okay, wait, hold on. Can we make everybody laugh today? I'm just gonna say something funny. I just make a post, right? Just a random post, right? Just like we successfully call, I just pinned it, right? Just because I like, you know, if you're gonna do something and then pin it and say this is my play, it's just to be bold. It's to really say I'm very confident, right? Some rando small time fund manager guy, I don't know, like 400 followers is like, you should quit while you're ahead. I'm like, I can teach you about liquidity analysis. I do. Market was too liquid to crash. Time post is it's just like, you know, tech talk. And then some plug of some rando not is the best and most accurate research available. I have my team follow recommendations, blah, blah, blah. I'm like, I'll show you something you've never seen that. I promise you, come over. And then the guy's like completely salty. And that's what bears are. Because if you're long, which you are, you learn that option. Hedgehog doesn't like losing and they rarely do. Like, it's just goofy, right? People are very much like, here's my emotions on a plate. I want you to deal with them. I thought we were having an intelligent conversation. Anyways, I'm like, should I say something like GarageBand fund manager with 400 followers trying to e-flex on double-digit gains? I'm up thousands of my percent of my gains on a random Twitter feed. And I said, explains the small size. And I'm not talking fund or followers. Oh! But I didn't hit enter yet because I'm not sure. But, oh, that's savage, right? Something's pretty small. Dude, I'm so savage sometimes. Don't do it. Okay, I'm just kidding. Okay, no, I'm just gonna say, good luck, sir. I know, but I'm like, just what I'm thinking, like, I think like I like to say funny stuff. I would not, like, I don't care enough, but I thought it was funny because I'm like, man, I should write one-liners for, you know, for sketch comedy shows, but that's just a joke. But people really do. It's weird. Like, I'm like, who are you and why'd you show up on my feed and why are you trying to tell me I'm like I think they're trying to advertise that this is what these people do. Name dropping whatever they're selling inside of a, you know, a post with like hundreds of thousands of impressions. That's what they're trying to do. It's advertising their shit in a thread with a lot of traction. It's SEO manipulation. It's that kind of stuff. That's what it is. Name dropping something. It's like people going into like an Elon Musk tweet and start, you know, dropping their businesses and stuff. Baba, that was our call for today. This little play, Run Out is killing it still. No, it's probably some marketing thing. It's probably not even a real thing or firm or fund. It's probably just that company. My analytic research, this and that. I'm like, thanks for tagging them and also making me mention them. See, it's what it is. It's clever marketing, right? Incite somebody to engage in an argument with you with their stuff tagged, and therefore I'm now, you know what I'm saying? That's what it is. But people like go out of their way to like go out of their way, which is interesting how they do that. But most of it, it's just clever marketing. There's idiots that come in here and start name dropping terrible products and stuff all the time, because, you know, obviously if your thing was good, it would sell itself, like, you know. But if you got to aggressively market it, well, it means that you're struggling. So yeah, add a clock to your live streams. It helps in going back in the video if we missed something. Oh, interesting. Never thought about that. Well, here's your clock. If you look on my chart, you can really kind of see about where it is, but adding a clock would be interesting. Maybe a clock or a time representation on the platform. That'd be kind of cool. Let's take a look at EVXY today. But no, I actually I don't engage in like silly Twitter stuff. I don't cause like Twitter fights. I just thought it was funny, and I only typed that to show you guys, to give you guys a chuckle today. But I'm pretty much understanding of what people's real intentions are. We've made consistent double-digit gains, what the person said, and it was really hard to do using this service. Blah, 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 blah. And I'm like, oh, okay. Probably just a VA somebody hired to advertise their firm. Fake, you know. Not really a fund or a firm, just like a marketing thing. Called Q Clock at work for having a clock at the top of all windows. Okay, I'll check into it. This is good to see this right here. Oh my god, that's so funny. Yeah. Trading's a very emotional sport. There's not a lot of sportsmanship in trading. Emotions run high. Most of Wall Street are just like grown-up babies with egos. They get bruised super easily. And especially like money managers, right? You have to face whatever your clients, like if they're wrong, the clients blast them with thousands of emails. So I'm sure stress runs high, especially if you're a bear over the last month, which I presume a lot of people are. So they're not going to just easily be, oh, good job. You know, the firm has a stance. They have to defend the stance. And nothing else you can do. So SPY's pretty okay. Resilience is looking good. There's really not a lot. We're still not irrational territory. I'm not... not a lot of momentum coming from this yet, but there is a very strong resilience push. Market's irrational though, so remember, this could drop in a heartbeat, so keep an eyeball on that. But Vixen collapse, there just really is no, to me, there is no downside suggestion just yet. Market's nice and stable today. Let's look for some scalp plays, and then we'll call it a morning. And we'll go over to Zoom. Did y'all like the Zoom sessions yesterday? Yeah, we had some really good ones, right? Make sure you guys go to rocketscooter.com, get the free trial. Are we all grown-up babies? Yeah. Funny that you say that, because, of course, right? Grown-up babies. Well, yeah, but you remember the joke that was like, was it Mitch Hedberg, where he's like, I hate it when somebody says, hey, check out a picture of me when I was younger. And he goes, all pictures of you are pictures of you when you were younger. Why do you say that? How about show me a picture of you when you were older? Then I'll be like, let me see that camera. I was like, yeah. Yes, there is, Darius. We actually show you a way in our Discord. It's very simple. You can, at 9:30 in the morning, you get the value of SPY and the value of ES, right? And then you make a fraction. Luckily for you, it's close to like 10 to 1, right? But whatever the fraction is at exactly 9:30 in the morning, then you cross multiply to convert one to the other. So an example, if 9:30 S&P was 3,500 and SPY was 350, you divide it to be 10. So then you take every one of these levels and just multiply it by 10. Or whatever that fraction is. So take each one of these levels and multiply it by the fraction of ES divided by SPY at a reference point. And we pick 9:30 reference point. To be completely accurate, that's how we do it, because that's when the numbers are calculated. So it's the conversion at that point in time. Type it for you just to remember. You take ES at open divided by SPY at open, and then you multiply times any rocket scooter level SPY equals. Make sense? And we're going to get futures conversions data by the end of the month in December. So we'll have it automated for you. You can click a button and it would turn it to futures. Yeah, so every day you want to do that number because they can drift away from each other. So every day I would convert that ratio that Blue Edge said. Make sure you do it at the reference point. Since these are calculated at 930, you want to know what the 930 values of that contract is relative to this. It's just a relative position. Yeah, UVXY just popped. I'm watching it right now. Yeah, there's that 9, right? So that's going to tell Rational further. Just seeing what that looks like. Keep an eyeball. Yeah, remember we talked about this? So be very careful today on this move. Yeah, no problem, dude. You guys check out. We're going to have, like, the stream is just one thing. Like, we do the stream all the time. Once a day. Oops. But we do hours of training, which is very, very, very rigorous, which we will do again today. And our Discord will do a Zoom call. So make sure you guys go over there. To go to that Discord, it's free. And we're going to do a Zoom session in about 30 minutes. And we do hours of them. We record them. We're going to post them. There's no subdivision unless you buy micros. I guess you can with micros. But they're very illiquid nonetheless. SPY is infinitely more liquid and settles in shares. SPX doesn't settle in shares. So you'll use SPY. Does that make sense? So for crude oil, you can use USO. For gold futures, you can use GLD, things like that. The mechanics of share settled instruments and delta hedging are going to be more represented in your share settled instruments. Yep. So you will look for SPY and convert to SPX the same way the person earlier was looking for S&P futures. It can be converted from SPY. So there's a reason. Yeah. There's a reason we use UVXY and not VIX. Similar. You get such a better read. And here's your proof in the pudding. Volume spike, volume spike. See right here, right here. It's that relationship where you buy the shares, the dealer gets on the other side of the trade, or you long or short the shares, dealer's on the other side of the shares trade, and they're buying options and delta hedging the options with the shares. That roundabout is what's needed. You buy a futures option, a right to buy or sell a futures contract, they'll be there's not as much granularity to short or long futures in a one-to-one sense, and especially cash, right? You buy an option that settles in cash, the person on the other side of that trade, like I buy SPX option, somebody sold me an SPX option, and then the option goes in or out of the money. What do you think they're out there longing to make the gain or loss to settle that trade with me? If it's cash settled, they're out there trading SPY or futures, one or the other, to make that cash. Well, ETN typically goes and trades in futures because it's a debt instrument, right? ETNs don't settle in anything but cash as well. Right, so they're gonna be trading like VIX futures, for instance, UVXY, or not UVX, sorry, VIX options. People are gonna be out there trading VIX instruments, any kind of ETN or any kind of instrument like that that is not able to be hedged with shares of the underlying that is part of that contract. They're gonna go into the futures or an ETF or something. So typically, like if I was selling SPX options and I sold some calls and they go in the money, well, what am I gonna do to hedge? I need to buy something else, whether it's some SPY calls or SPX calls. On the other side of the coin, I could buy more calls, but then I'm just losing money on data. If I wanted to hedge effectively with shares, I got to buy shares of something. Well, SPY's my option, right? So that's why we always circle back to anything that's share settled for our technology. Do you guys follow? Is there a Globex VIX for overnight, Timothy? Yes, /VX, as Garrett has said. /VX is how you represent it in Thinkorswim. I don't know if and VX is the code from the CME group. Actually, I think, no, that's not CME. That's, VIX is different. VIX is, I think it's CBOE or CBOT, one of the two. But VX, that's the official code. Is GLD, and yes, right. All of the other ETFs, especially single commodity ETFs like GLD and I mean, whatever, SLV for silver, things like that. Yeah, same way. We have a conversion team in our Discord that's entire job that they themselves create. Not that it's not a job. They created this volunteering effort. Is they convert all of those ETFs into futures contracts, and they have like a little community inside of our community. Futures traders, and they basically take these share settled correlations and they convert them to futures. The share settled instruments that correlate, and they do every morning. For IAB, you have to search for VIX and select futures. Selecting VX won't get you there. Yeah, every platform will have a different nomenclature or contract designation, but officially, yeah, depending on who you're with, how you get it. It's going to be different letters. Okay. Okay. I'm going to call it a day. Again, watch that UVXY. This is now a second irrational signal is when you tap and you are above now. It is no longer rational on VIX side until we get below 9 again, which means the market's going to have unusual volatility here as we somewhat predicted. PQQ and SPY are likely to be taking a little bit of a hit off of that. Expected. And there's that kind of volatility, right? 390 is decent support with an understanding that this is an illiquidity pocket. If we lose 390, it is a rapid fall to 388. Keep that in mind. There is no support through here, and this does not mean reversion. This is an illiquidity pocket. The market does not like to stay in here. Once these, once you're in here and these puts go fully in the money while the calls are in the money, the market becomes very unusually volatile in illiquidity pockets. Today's UVXY is foreshadowing that. The difference between bull zone and bear zone being inverted like this is that if it was the other way around, the market will like to stabilize in the middle while both sides are out of the money. Right now, calls are in the money, and if this goes in here, now puts are in the money. Both trades are in the money, and it becomes very violent inside of here. So a break of 390 today will be very violent. Rocket Secure tells you that. The anticipation of that violence is being very much reflected in today's VIX, as you can see. People loading up on VIX calls, as you see, right in this range because they're expecting that volatility. So these VIX calls are in the money now. Clearly, it's a battle between is the market volatile or is the market not volatile? If the market's volatile, then you can say goodbye to the market today. The floor will drop out quickly and VIX will start to rally from this 9, the first thing we said this morning. Which means we'll draw 30 more points on the S&P today, so be very careful. This is hinting at that, but this is not showing that's happening yet. Not a lot of mechanical momentum that's going to appear today. It's just going to be hedging. Whatever's going to happen today will happen randomly from here. Markets are irrational. Rational markets tend to behave randomly. But this to me is a buy signal with a short stop here, or a 1 point stop here. I'm waiting just for that head pressure. And then back in to, well, I'm still in, but like I'm adding to my position. I do want to add to my position today and tomorrow. And one of the things I'm going to say is that if I do get a bump up this week, I'm going to try to push my Googles out maybe 3 more weeks. Just roll them into a later expiration. Okay, we'll see you guys maybe in 30 minutes. Everybody go to the Discord and go to rocketsecure.com for the free trial. 7 days. You can try out our software. Brand new technique you've never heard of or seen before, as they're showing on the screen. No more technical analysis. No more technical indicators. No more delayed chart patterns and eye-blinding neon visuals for your trading diet. Liquidity map is 3 simple data points put at the start of the day. They never change till the next day. And it's a nice, clean way to read the market without all that noise. Want to learn more? Join us in our Discord. Link is in the description. 30 minutes, we will be going through a deep dive on the platform. To grab that trial, no credit card required. Nothing to lose.